And Bart and Alison, if you would turn on your videos, um, you know, we're very lucky now to have the person that more than anyone enabled Alice and I to get started, because I won't tell you the Genesis story. Alison will do that, I'm sure, as she introduces Bart. But I can't tell you how happy I am that Alison met Bart. So with that said, Alison, over to you, and Bart, welcome to this event.
Thank you, Matthew.
Great. Hey, Bart, thanks so much for joining us. This is a good time slot because we have this full day event and we still have some folks from Europe on the line. We have US people and we may have a few from Asia. So we're particularly excited to have you join us. As Matthew said, we're huge fans of blockchain co-investors, founded by Bart and his brother Brad Stevens.
Blockchain Capital.
Blockchain Capital back in 2012, 13. And you've grown the firm to be one of the most respected by far in the industry today. So it's been incredible to watch what you've been able to do, and it's not easy. It's not for the faint-hearted, Bart. Rather than me tell the Genesis story, would you mind sharing with our audience, you know, how you and Brad decided to sort of go all in on this when there are many, many other things you could have been doing with your experience set and skills at that time?
Sure, happy to get into that. And I want to say hello to everyone who's listening and to thank Matthew and Allison. They've been some of our earliest backers and have been partners with us through our journey of growing blockchain capital, indeed a whole industry from scratch. So it's humbling to be here, and we're very grateful for our partnership over the years. And you know, crypto and blockchain is a tricky area. It's okay for investors to have lots of questions. And so, you know, being able to be an LP in blockchain co-investors as a fund of funds, I think makes a lot of sense. There's a lot of landmines out there, and you want to be with the best managers to help you avoid those. But, you know, to answer your question, to rewind the clock 13 years, you know, my brother and I were hedge fund managers together for about 12 years. And we focused on small cap technology stocks. We invented a term called nano cap investing. And so our fund was called the Nano Cap Fund. And it was basically acting like a venture capitalist in the public markets. And we had started this in 2002, 2003, in the wake of the dot-com crash. So, you know, a lot of the founders that we back are in their 20s. They don't remember that. But I sure do, because all my friends were out of work, and you know, the NASDAQ collapsed, and the Bay Area real estate was like decimated. And we had this contrarian thesis at the time that, you know, there's babies that were thrown out with the bathwater, and that there were some real enduring internet technologies that would come back. And it was very contrarian at the time. Looking back now, looks kind of obvious. You know, we got Facebook out of that and Salesforce out of that era and a bunch of others. But you know, investing is a very competitive marketplace, and so kind of our niche was this venture capital approach to investing in fallen tech companies. And you know, we started out with the grand total of $1 million in the hedge fund world. That's pretty laughable these days. Now you have to start with $1 billion. But you know, slowly and steadily, we did fundamental research and found these internet companies that had a negative enterprise value. You know, or they had returned to their A round valuation, and Sequoia still had, you know, their position, was trying to like buy in the open market. And so, you know, what we ended up doing is, you know, focusing on fallen internet stocks, and that evolved over time. We got very into genomics and personalized medicine, and you know, we're involved in great companies like Illumina and the founding of 23andMe, and then we had this other area that would eventually lead us to crypto, and that was video games. And I know it sounds strange, but you know, the video game industry actually has a lot of kind of correlation with crypto in many ways. If you look at some of the early founders, they had the same path. And what Brad and I had as young hedge fund managers, and also kind of lifelong gamers, was a perspective that the video game industry was more than it seemed. And so, our dad had founded an investment bank called Robertson Stevens, took a lot of the early video game companies public, and he would bring them home and give them to us, and we would kind of get these video games for free and illegally copy them and have our friends, fill out forms, and then we'd hand the research back, and the sell side research analysts would call it a proprietary industry research study. And then they go pitch Electronic Arts and Activision and stuff like that on IPOs. And indeed, they took a lot of those companies public. And when in our as the video game industry evolved and it became more online, we saw the rise of these virtual worlds, like games like World of Warcraft or Second Life. And there were 10 or 20 million people in this virtual world, and we noticed some strange behavior. If you drop 10 or 20 million people in a virtual world, they start acting like they do in the real world. Economies form. You need digital currencies. People want status. They want respect. If you slay the dragon, you get the shining, armor and the diamond fire sword or something like that. And that was really interesting behavior to us. And we saw secondary markets basically develop for the trading of in-game digital assets. And kind of, a light bulb went off in our head, and we made a series of investments kind of in and around online video games and the fact that gamers that were primarily young men, but on a global basis, these games are very popular in Asia, were paying real world dollars, euros, won, and yen for digital currencies to go buy these items to improve their status. These are digital items that, made these players seem powerful or gave them special skills in the games. And that was really interesting behavior. And after the 2008 financial crisis, we saw the writing on the wall in terms of the changes that was going on in the hedge fund business. The largest 100 hedge funds, and Allison and Matthew, you guys lived through that too. Allison, I know you personally, and taking some very brave board seats and some great stewardship of banks and fintech companies. But we kind of saw the writing on the wall and saw that, the largest, and this was the Madoff scandal had happened, the largest 100 hedge funds were getting larger. And if we were kind of a niche player like us, it wasn't a bright future. And at about this same time, 2012, we read the Bitcoin white paper. And then, a venture capitalist friend, Mickey Malka, had basically made the first Bitcoin investment as an institutional investor. And we read his letter to LPs, and then we read the Bitcoin white paper again, and then we started just doing research. We've always been kind of raised to do fundamental research first, go talk to primary sources. And so my brother and I spent, about 3 or 4 months calling everyone that we could and going and meeting with people, core engineers that were building the Bitcoin protocol, and bankers and lawyers and accountants and people from our fintech Rolodexes. My brother was like an internet research analyst, and there was a lot of crossover with a new security model with blockchains. And, at the end of it, we kind of came up with 2 conclusions, and one we had a hunch on, and one was a surprise. The one that we had a hunch on was that Bitcoin that was trading around $100, we thought was like an incredible asymmetric investment opportunity. So we started mining Bitcoin, and for our own family, our family office, and this took a life of its own. By the way, you do not want to live with Bitcoin mining gear. We're putting in my brother's apartment, and it's very loud, and there's fans, and throws off a lot of heat. And so we moved it to our dad's garage in the hills of Tiburon, which is a very fancy neighborhood, and melted down the local transformer, and the power bill went up like 10x. And he's like, "What are you boys doing in the garage?" But what that was doing for us is we were physically assembling these Bitcoin mining machines that allowed us to learn the hardware, learn the software, and continuing to talk to anyone that we could that would get us smarter about what Bitcoin was. And as we were buying Bitcoin, we had this other aha. And it was that other aha that caused us to really start Blockchain Capital. And that was, we saw a world 5, 10, 15, 20 years down the road where there would be more than just Bitcoin. That Bitcoin was one thing, a digital asset, but there was this distributed and decentralized open source network that was incredibly robust underneath it that, people were not even calling it blockchain technology then. The word hadn't been invented. They were calling it big B, little b. And so And so we had this kind of divergent thesis that, there would be lots of blockchains, and a lot of the people at the time were just focused on Bitcoin. And while I love Bitcoin, we just had we had a feeling that, and we started talking to entrepreneurs, and they weren't being listened to on Sand Hill Road. And we started talking to Sand Hill Road venture capitalists, and they were like, "What are you guys doing? You used to run $1 billion hedge fund, and now you're like talking about blockchain technology. Isn't that just used for, buying drugs online?" We're like, "No, it's this incredible system for the exchange of value, just like the internet allows for the exchange of data." And so we saw a gap in the marketplace, and that was kind of the genesis story of it came from the world of video games, and then kind of a gap in the market where people didn't understand that something bigger was going on than just Bitcoin. Bitcoin now sits at, near a $2 trillion market cap, and it's been one of the fastest technology growth stories ever. But indeed, as we thought, there's thousands of blockchains, and I like to frame our industry as there's kind of three things going on at once. There's blockchain technology, which is kind of the underlying and enabling technology, and it's based on composable open source software. That kind of enables a second new thing, which is a whole new species of assets, a new asset class that are programmable, and they're traded 24/7, and they're community owned, they're not corporate owned. And the kind of third thing that makes it a little funky is there's like a crypto culture there that is transnational. It is super sovereign, and it's primarily driven by young people, many of which that feel kind of left behind from in the traditional financial system. So that's kind of our mission and our stories to help these entrepreneurs level up. And it's been quite a ride, I can tell you. Being in crypto is not for the faint of heart.
I think I'm glad you got the chance to share that, Bart, because I think it's an incredible genesis story. And when I met you in 2013, you were already, so thoughtful about the space and the bigger sort of macro opportunities created by blockchain when everyone else was just very confused. And I think your sort of fundamental approach, the research, the getting out there, the talking to anyone, you really did your homework and also start to see a bigger picture. And then another point you raised, I think that is really important, is all the kind of under 40s now were the people who were playing these digital games in the 2000s, right? And that is why politically and, in most countries across the world, that is the generation that totally understands blockchain digital assets and cannot understand why legacy financial services companies just, don't work as well.
No,
But
that's a great point. There's a huge crossover between video game players and owners of digital assets. And these are digitally native young people. They've always been able to message each other. They grew up with a cell phone. They think it's strange that banks are closed 75% of the time. Like even our leading fintech apps, the PayPals and Venmos of the world, are based on the ACH checking system. That's our paper checks. And so what we're seeing is a wholesale kind of reinvention of the financial system in one way. But I would argue that blockchain technologies has impact much greater than just financial services, even though there's certainly a lot of activity in that area. And we've been investors in a lot of the major financial kind of infrastructure players from seed round on.
Totally well said. So I think you got started in like 2012, 13. And, since then you've just built an amazing firm. I think, if you talk to anyone about the most respected venture capital firms in the space, your firm comes up. You have over 2 billion of assets under management right now. And, you really high caliber built out team. I'd love to just talk a little bit about your journey from there to here. So, two things. One, how have you gone and built out the team, found the people over the years who can actually, keep up the competitive advantage and, discipline that you have in investing? And then linked to that, how do you find the projects to invest in? I mean, I know that we all know that, Mitch had a chart earlier, like 3% of a venture capital portfolio will deliver nearly all the returns, and the rest will either lose money or, make a little bit. So there's a huge failure rate, and I know your firm looks at probably thousands of projects every year to pick maybe 20 or 30 to invest in. And yet you've hit so many of the, the unicorns from Coinbase, early investor in Coinbase, Kraken, OpenSea, Ripple, Anchorage, Tether. How do you go about actually, figuring out which projects put your money into versus stay away from? And I know that you've stayed away from things that a lot of other firms were investing in, and you've been proven right. So I'd love to have you tell our audience here a bit about those two things.
Yeah, those are like two very good questions. And, we've had to kind of reimagine the venture capital industry in some ways, and also be a student of the history of venture capital. We're very lucky to have maybe 15 or so founders of VC firms that are our LPs over the years. And these are the brand name firms on Sand Hill Road. And, like our dad was a part of raising Kleiner Perkins 1 LP. So we have long roots in the Silicon Valley ecosystem. And it was, we've been able to learn a lot from some of these mentors that have gone before us. And that has helped us kind of build our firm. And one of our kind of observations was that, there was kind of a cookie cutter approach on Sand Hill Road. You had to go to, no disrespect to those on the call from the following institutions that I mentioned. You either went to Harvard or Stanford, undergrad, and then you either went to GSB or maybe Wharton or MIT or something, and you'd be, 26, and you'd be lucky to get in a job as an entry-level associate, and you'd make partner if you're lucky. Primarily white males, by the way, if you're in your 40s. And then, if you were the founder of the firm, you might be hanging around the hoop till you're in your 70s. And that just seemed a little strange to us, and it didn't seem kind of tenable in a crypto culture that really values kind of community ownership. And so we started with basically, two brothers and an assistant and an idea that their blockchain would be an industry that would be enduring for decades. And we wanted to build a firm that would also endure for decades. And so from day one, we basically been on the hunt for human talent and reimagining the venture capital industry. And, it's meant zigging and when other people zag sometimes. And, we've been very fortunate. We've been able to raise, 7 funds in 12 years. You mentioned we have several $billion of AUM. And the rule of thumb that you kind of mentioned earlier is correct, that, it's usually in a given VC portfolio, there might be 30 investments, and it's like 1 or 2 of them generates all the returns and all the rest of them die, or maybe you get your money back. That's not the case with us. If, for those that are interested, if you go into our data room, over the 13 years of our 7 funds, about 85% of our companies are still alive. So the VC industry, one of my mentors taught me, is really about the 3 S's. It's about, sourcing, or you're seeing the right deals. And that was the second part of your question that I'll get to. It's also about selection, making sure you're picking the good ones from the bad ones. And the last S is really about stewardship, getting involved, shoulder to shoulder with that founder in the trenches, building an industry from the ground up. And it's hard work, and it's not for the faint of heart. And so what we did early on is, think about the very, very long term as we built our firm. And that included hiring our first non-Stevens brother partner, which was Spencer Bogart. Spencer kind of runs our research department, and he was Wall Street's very first sell-side research analyst that was publishing on Bitcoin. He started calling us and asking us about Ripple, and asking us about Coinbase, and asking us about Digital Currency Group. And we thought that was pretty interesting. And so we started just kind of a relationship with Spencer. And, if you read his first sell-side research report way back when, you'll notice there's a lot of blockchain capital portfolio companies in there. So we kind of like co-wrote it with him and got to know him, and Spencer became our partner. And what we've been able to do over the years is attract really high caliber talent by basically being very generous with economics. And also the industry has gotten more complex and technical over time. And what we try to do is align the values of blockchain capital kind of along the values of crypto culture and kind of best industry practices in traditional venture. So that means transparency. That means meritocracy. We don't care if you didn't go to Harvard. If you are like 19 years old and want to drop out of college and join our firm, which has actually happened, and you're one of the best and brightest DeFi analysts, like we want you on our team. And so, you know, our firm looks a little different than a traditional VC firm. We have 5 partners, or 5 GPs, and one partner at Yuan who just made partner. We also have an in-house engineering team that we've built out, where we run and operate infrastructure and can get into the source code of these projects, and even parachute sometimes our engineers into our portfolio companies to help them, you know, guide them on their way. We've had to build out a full policy arm and engage with Washington, D.C. I mean, I've given thousands of briefings in Washington, D.C., and we had an existential fight for our life over the last 4 years. The last administration was incredibly hostile. I mean, everyone is probably aware of this, but, you know, they were eventually just said the quiet part out loud that, you know, we don't want crypto to exist. And these, you know, they went after all the biggest companies, and they lost in the courts. And if you, Allison and Matthew, if you would have told me 7 years ago or 10 years ago that, you know, we'd have, you know, a president with the meme coin and Larry Fink as Bitcoin's #1 ETF, you know, salesman, I would have said you were crazy. But as an industry, we've had to pull a lot off, and it's a gritty industry. These people are very passionate about the values of crypto, and those are the values of our firm. So we are integrity first. We are founders first. We want to be the quiet professionals behind the scenes that help these young men and women level up and kind of get to from the A round to the B round, or the B round to the C round, and create new products and services in, you know, kind of these different verticals that we've seen grow past Bitcoin. And it's really exciting, honestly. It's also a lot of hard work. Building an industry from scratch is tremendously difficult. Fighting the government at the same time is tough. And so we're at an interesting inflection point, I would argue, in crypto, where I would say the risk-adjusted return of our industry has never looked brighter. You know, our industry raised $150 million in the largest super PAC in the last election cycle, focused only on Congress. We had a 91% success rate at Fair Shake, which is a super PAC that we helped seed. And it was bipartisan. And so if you look at the House committees that regulate financial services, it's the House Financial Services Committee, it's the Ag Committee, it's the Senate Banking Committee, and they're all full of pro-crypto people. If you look at the current administration, you know, they're all either own crypto or are pro-crypto. And this didn't happen by accident. It was a lot of hard work. It was a lot of lobbying. And now we're, you know, at this point where crypto is going mainstream, and it's kind of green light for traditional financial institutions. And, you know, for the audience members out there that don't have exposure, I would argue that that's irresponsible almost at this point. Like, you shouldn't have 95% of your net worth exposed to crypto like me. That's too much. But 0.0 is not the right number. Like, you have to have some exposure to the most disruptive technology that we've seen in decades. And I think AI will just accelerate that. To your question, I guess, on kind of like, how do we, you know, get the companies right and stuff like that? It's fundamental research. It's being aligned with the industry. Having, you know, 150 portfolio companies gives us proprietary deal flow. We can track online. You know, these are public blockchains. We have our own data analytics team and AI engines and an advanced products group. And so it's a real fertile and interesting area to be an investor, where there's truly asymmetric, kind of unfair advantages that we enjoy.
Yeah, totally agree. And I think your firm and your colleagues, you're so well respected by the entrepreneurial community in this space, because I like the way you walked us through sourcing, selection, and stewardship. I think your stewardship, you know, your involvement with the companies, helping them, leaning into the politics, you're just really regarded as sort of a part of the inner circle. And as a result, as you say, you get, you know, information benefits from that sort of help you pick teams to invest in. So I'm just noticing time with you goes very quickly. And before we leave, I'd love to you know, pick your brain for many of our investors today are wealth advisors, family offices, high net worth individuals. So I'd love for you to give them some advice on, you have a little bit already, but if you or them, how to think about the space, but maybe leading to that, just to touch on sort of some of the investment themes, like, how going forward, how do you categorize the sort of thematic areas in blockchain broadly that you think are most interesting and where you guys are focusing your investment dollars and research resources?
Yeah, it's a timely question. We literally just had our quarterly themes and thesis meeting yesterday with our entire 30-person team. And at Blockchain Capital, our investment meetings with the investment team are open to everyone down to administrative assistants and operations managers. We believe in that transparency. We believe in that flat culture. Anyone can say anything at any time. Listen, there's a lot of ways to go wrong in crypto. One of the things we're proud of is that we've never invested in fraud. FTX was really easily identifiable as a self-dealing scam to us, and so
Yeah,
you want to be with
right. You're one of the firms that just stayed clear of it from the beginning, and many other people were sort of saying, "Don't miss out on this."
Yeah, and so I would say, to the RAs of the world, or if I was a private client manager at a large investment bank, is you want to be with a specialist manager. You want to be with maybe a fund of funds actually really makes sense, in crypto, because you get access to the best managers that then get access to the best deal flow. And, some of the things that, just jump off the page at us is, the continued growth of stable coins. Stripe buying Bridge, which was not one of our portfolio companies, but we own the top three stablecoin issuers, for 1.1 billion was kind of the starting gun for me, where you're going to see a wave of acquisitions from traditional financial players buying out crypto companies because they can't home grow this stuff. It's too difficult. Custody is incredibly different in crypto than it is at, say, State Street, where there's paper certificates and transfer agents. We don't have that. Crypto transactions are instantaneous. They're peer-to-peer. There's no counterparty risk. There's no clearinghouse. And so, I was looking through some of our kind of themes and thesis, and we recently, we're pretty excited about the wallet space. We recently made a large investment into Phantom, which is big part of one of the fastest growing wallets in the Solana ecosystem, and is onboarding a lot of people. We're also an investor in WorldCoin, which is Sam Altman of OpenAI's company, that is actually kind of a digital identity play as well, and is maybe one of the fastest growing wallets around the world, and will be entering the US later. We think security is really important. You read these headlines of North Korea steals $1.5 billion, from Bybit, which was a exchange in Asia. That's not okay. And so I think you're going to see the kind of checkpoint softwares or Palo Alto networks of the world in crypto really grow from an interesting area. We see a ton of deal flow at the intersection of crypto and AI. These are hand-in-glove technologies, in my opinion. If you think of AI as creating a world of abundance, blockchains are really good at securing scarcity. And so what I think, like when I go talk to politicians, they're really worried about like deep fakes, like someone pretending to be them, saying like the opposite of their policy positions. And so we've already solved that problem with blockchains. You can just digitally sign, and execute on a blockchain that is indeed like a watermark, that is indeed your statement or your attestation. I think we'll see a resurgence in DeFi. DeFi kind of got crushed during the last bear market when the federal government, 3 and 4 letter agencies went after it. But just yesterday, Coinbase made an announcement of kind of institutionalized DeFi, and this is traditional banking-like activities, borrowing and lending and saving and hedging and high yield, and but it's done with software. It's not done with hundreds of people in the back office. That's why Jamie Dimon doesn't like it. And I think we're going to see some interesting things at the intersection of social media and crypto. Some people call this Web3, but it's really owning your own data. And around that and adjacent would be kind of data analytics. And so these are some of the kind of themes that we focus on and theses. But I did look up these numbers for you. Our themes last year were 7, and it's grown to 18. And our theses was we had 84 separate investment theses last year. Now it's 164, and maybe that's emblematic of the industry. It just kind of keeps expanding into new subverticals, and it's it's really exciting to be a part of it.
Yeah.
And we're grateful for our partnership with you.
Yep, it's incredible, Bart. Well, we're just one question quickly, maybe a soundbite on this question about IPO window opening or exits in this industry, which has been, you know, a challenge in the last few years because of lack of liquidity, but also, you know, regulation by enforcement, etc. Do you have a quick soundbite on what you're thinking or expecting?
Yeah, I think, listen, to your point, crypto is kind of unfairly targeted, and you don't have to believe me, you can believe federal judges. But I think there's actually a lot of constipation in the general venture capital industry, and I think a lot of those deals go first. So this is a contrarian opinion. You know, I think you're going to see Stripe go public maybe before, say, Kraken or something. But there is unmet need in the public equity markets for exposure to this. You can't, right now we have like a comp group of one company, Coinbase. It's a great company, but it's one. And there are dozens and dozens of, I think, IPO ready companies that will go out. It'll depend on the macro environment. And, you know, and so your macro crystal ball is as good as mine. We actually have to follow that too. But I think what will precede the kind of crypto IPOs starting in maybe end of the year or Q1 next year will be some of these other kind of very mature traditional vanilla tech companies go out first, because the LPs, you know, in the traditional Sand Hill Road generalist tech firms, they haven't seen a lot of DPI in a long time, and that's very different than crypto, where we've been able to give DPI back via, you know, token exits, which doesn't need Nasdaq's opening signature or New York Stock Exchange banging of the gavel. They just start trading Kraken or Coinbase.
No, I think that's an excellent point. And Joe, you were saying we need to be a little bit more patient in our industry, perhaps. But it's coming, you know, within the next few years. So this
Without
was
a doubt.
Art. We really appreciate you. We love your firm. We're delighted to be long-term LPs. And thank you for joining us today. Great insights and wisdom.
Well, right back at you, Allison. You've been a great mentor, and Matthew, and all you guys built an incredible firm, and I'm just happy to share some of my insights as one of the granddaddies of this industry. I like to tease Tim Draper when I see him, or Mike Novogratz, who are like 10 years older than me. I'm very grateful for them. Otherwise, I feel like I'd be one of the oldest guys in this industry.
You are an OG, but you still look young and full of energy. So
All right. Thank you so much.
great. Thanks, Bart. All the best.
Thank you, Bart.
Bye.
Goodbye, Alison.
Okay, back to you, Matthew.
Yeah, thank you very much.